Welcome to the Trading Lounge, and here we're looking at the S&P 500. Essentially, this pattern at the 1550 here is a wave 4. It can be counted in a variety of ways, but it is corrective, but that may continue. But we are also seeing impulse waves to the upside. So what I mean by that is that these structures, in this one here particularly, and this one here, and also this one here, they're looking as impulse wave 5 waves, so they're actually giving the direction to the upside. In terms of trading, if we just sort of drill in here a little bit, the first thing is that being above the 1550 here, as mentioned yesterday, this retest into here confirms this as support, as this does here as well. It's just really finding a way in, and of course, just the next from 1550, the next level above is the 1565, the 72, and the 80 through here. Once it enters group 2 here, then it will feed itself higher, but it will react at 72 and the 80 as well. And also, as I mentioned before, the little numbers in here as well, all the even numbers in here like 60, 68, 70, 72, 75, 70, 78 through here. They're all it's like a zone in there, and there's lots of little resistance points in there, but these are the major ones here. So once the price gets in there, she should climb higher from that point. It's just a matter of finding a way in. So this little wave here does appear a little bit impulsive as well in terms of 5 waves to the downside. So we need to be a little bit mindful of that this is just not a rally here. So what we'd need to see here is we would need to see really good support on the 1560 here. So, if this does move back down through the 1560 and then find support on it, then you've got your long trade from that point there. This, like I mentioned, this whole correction can be counted in many ways, and one of them is this here in terms of, well, actually from here, this can be counted as a wave 1 to the upside, then an A, and a B and a C wave here, and then moving up for wave 1 here, and moving back for wave 2 here, and then moving up through here further. So it is getting there. If we look at the Dow Jones on a smaller scale as well, in 30 minutes here, I've kind of got it pointed out a little bit like that, in that we've got little 5 waves up here. We can also call this an A wave, a B wave, and a C wave to here, or we can call this little move up here as wave 1 and wave 2. But either way, we can see that we've got the first retest on here. If this market moves through the above the supply level, which would be this lot here, this is the first supply level, this is the second one through here, and it may be creating the third one in here somewhere, but once it gets above that, so the 14,565, because 65, 72, and 80 would be group 2 there, and that's what's pinning that down. So that's the supply level. You need to be, a safer trade would be above the supply level. But however, if this little move up through here comes back down, retest this, and it's good if it actually, it's best if it does have a correction, because the correction is a testing in a way as well, the testing the demand. So it would be nice if it did come back down through here and then found support on here and then moved up. But either way, we're looking at further upside. It's just a matter of finding a way in, because it's nice to, in managing the risk, knowing exactly what price point to work from, and the price point comes from where the volume and the orders are on the retest, and that would normally be at a whole number or an even number, so to speak, or the closest largest number. The European markets as well, the the DAX here, look, it hasn't recovered as much as the American markets as such. So yesterday we were looking for, if we'd found support on 79, well then we could have gone along from there. We know that it's a risk because under the 8 here, it's in bearish mode. 8's a profit-taking number, and it's still going through that process. So this could still work lower through here. So look, support on 78 here, then you would scale in long through group 1, 78.10, 78.20 and 78.30. If support is found on 78.30, then it'll get you to the midpoint where you'll take your money off the table because it's meeting the first sort of part of supply there. If it became support, then you'd move in, back in again, then move up to the group 2 here. On the bearish side here, this number here is very important, the 772. You know that when we get 72 is strong, but when you get 272 or 772 together, then it becomes quite strong and you can use that. So any shorting would be done from that point there. The Footsie, let's have a look at the Footsie somewhere. Right, once again, we need to find support on, well, the 64 here, and then scale in through this group 1 through here. Yeah, you just have to wait for that to play out, and there'll be corrective activity within here as well. The Australian markets are quite interesting, really, because if we just start from the top here for a moment. We know that from this high point here, this 51.65 area through here, this move down here can be counted as an A wave or wave 1, and back up here for wave 2 or the B wave. And then we've got our little 5-wave structure down through here that we're tracking. So this can be wave 3 or it can be the C wave, and that could be the end of the correction as a C wave through here, and it would move higher up through there. However, it tends to be more like a wave 3 here, because this move here is in reasonably clear 3-wave structure there, which is corrective, which means that the market should move down further. And then we looked at, you know, this price action moving here. We thought we'd get another wave down here, but we didn't. We only got really 3 waves again through here. So what we've got is we've got 3 waves here, we've got 3 waves here, and then when we look over here, so far we've got 3 waves here. So what that does is basically create a triangle, and that's what a triangle is. It's a 5-wave structure in terms of 1, 2, 3, 4, and 5. In 3 waves each. Once it's completed, then we'll see that 5th wave come down here. So this particular point here can, and is starting to take the bias of a wave 3 here. So we need to be mindful of that. And the triangle pattern that's emerging through here would be like this here. So this would be an ABC for the A wave. Well, we can move these around a little bit, really. So we can put that there, we can put that there, and we can put that, move that out the way, put that there. So basically an A, a B, a C, a D here in 3 waves here, and then an E wave to here, then a move down through to here, and that would be wave 4 over here once that wave D had finished here. Now, it shouldn't really go above that section there. That's a little bit small there. But if we're wrong at that stage here, and it's not the triangle, well then it doesn't really matter, because it would need to find support on the 5,000 for any long trade anyway. So, you know, and it's not just enough to poke its head up. That's in part of the process, and it's important, but we never chase something through a level, because we know that 90-odd% of the time it's going to come back and retest it. So we don't want to get caught out. So the breakout's important as part of the process, but the retest is more important, and that's what we'd be looking for over here. So support on the 5,000 is what you'd be looking for. I mean, if you were intraday trading here, you just use the 72. Being on the right side of the 72 there would be the name of the game, and If you're going long, then you'd be looking for support on the 80 from that point. If you're going short, well, then you'd get a retest of 65 there and short it from that point down to the 50 there. And if the 50 became resistance eventually, well, then you'll trade it down to the 30, which is down here. So, yeah, that's that as such. Alrighty, and of course as well, coming into the long weekend, there's the possibility of lighter volumes, people cleaning out their books for the long weekend. But when they come back from the long weekend, we could expect a stronger move in the market. That seems to be the case in the US. And I notice a lot. Now I've said that, it was probably sort of wrong, but they seem to be sort of happier after they come back from holidays, and the market gets pushed up somewhat. And also to Thursday today, in the bullish weekly cycle, the Thursday is normally the bear day, which it opens higher and then trades lower for the day. So it's kind of a bit of a tricky thing because of the opening being higher. It kind of lures you into that direction only to turn and move down. So normally when we're looking at Thursday, if it is a bear day, and if it's on lower volume, then we know that we've got the Friday and the Monday up, but that's not going to be the case for our local market here. Alrighty, let's have a look at commodities, as there's a bit of support coming in there, which is good for the material sector and also gives a bit of weight to the upside. But I noticed the US banks were a bit off as such, but the materials sector was stronger. So, starting with the copper here. We're still in corrective mode. We're still above the 340, so it's supportive above the 340. It's technically going to support the materials sector, the BHPs and etc., being above this situation here. So we can expect this particular correction here to develop smaller sort of wave fours in the materials sector, the Australian materials sector, and of course the constituents within that sector. So and that's sort of panning out. So what we're sort of looking at here is the A wave here, the A, the B, and the C in here, which is not really a good C wave, but we'll run with that because it's back above the 345. So we have to look at this as an A and a B and a C wave moving up through here, and the C wave up here will be in 5 waves. And it's normally the length of the A wave here. Well, not always, but it's a good guide stick. The equality of wave A and wave C can be the same, but we'll be working with the 350 here and obviously the 348, the 8 here. All the normal numbers of 1, 2, 3, 5, and 8 through here. So support on the 345 is a positive. And this also appears to look like a little impulse wave going to the upside, impulse wave being 5 waves. 5 waves giving the direction of the market. So after 5 waves, we get an A, B, C, and then we get further upside. And that's pretty much the same with the gold market as well. So when we're looking at the gold market here, this is the bigger picture here, we still think that we're in this corrective phase here of a wave 4 here. Wave 4s are always complicated. We don't normally trade them because they are complicated, overlapping wave structures, and they just get sideways and complicated and messy and time consuming, and poking around in wave 4s can generally lose your money. So look, we're just basically looking for the A, the B, and the C wave up here, doing our best to count 5 waves up here, which is obviously finding support on 1600 really creates the retest of 1650, which is the medium level, but we wouldn't expect it to go that high. So just breaking that down a little bit through here. The move that we had down through here is only in 3 waves, like an A and a B and a C down through here, and then we've got sort of up for 1 here, back for 2, and up for 3. But this is also 3 waves, so we got 3 waves coming down, we got 3 waves going up here so far. Will this 3 waves here turn into a 5-wave sequence to the upside? That's what we're thinking. We need to sort of give that sort of consideration. We can see that at the moment the indices are running, the gold is running with the indices, so there's correlation there. So obviously the supply levels are up here. We're looking at 1610 becoming the support. If that's the case, you can move long on that. In the meantime, this move up through here, this sort of little strong move up here appears to be impulsive, but we need to be able to work from the closest largest number, which would be obviously the 1600 as such through here. But if you're a little bit canny, you could work with the 105 if you see some type of, or even the 103. If you see 105 is better, of course. If you can see some type, if it can come down below the 105 in some sort of A, B, and C through here, and then find support on the 105, then you can go along from that point through there, and then build on top of 1610 through there. If it does come all the way back down through here, and you can see that it is corrective, then you can find your way in after it's tested the support through there. If the 1600 becomes the retested resistance, then you need to be short there, because we'll be looking at some other picture coming to the downside here, because as I mentioned, we've got a three-wave structure to the downside here, which makes it bullish corrective, but at the same time we've only got three waves to the upside. I mean, I have labeled them as wave 1 and wave 2 and wave 3 coming up here, but look, that's not set in stone yet. We can't confirm that in the structure, and we haven't got 1600 here. So in a way, we are still going through this sort of wave 4 here, and it could get more complicated in terms of an A and a B and a C wave down through here as well. So we're just not there just yet. It also can be counted in down for 1, back for 2 there, then down for 1, an A and a B and a C, back for 2 again. So we can still be in a bearish mode here. So, you know, we don't have a solid support. We don't have a clear 5-wave structure in the next larger degree to give us that direction. So we just need to be careful. But because we're above the 1600, then the bias is bullish. But we need that retested as such. So let's just have a look at silver as well. So if silver moves back above the 28.72 there as support, then it's also bullish to the upside. But if it doesn't find support and fails, then it's still bearish to the downside. In the larger picture here, you can see that you know, we had all this moving down through here, which is fine. You know, we've got a little 1, 2, 3, 4, 5 here to finish the 5th off, but this is just a damn mess here, really. So it's very difficult to work out. It can be counted as an A wave to here, an A and a B and a C into here, as another B wave and then a C wave up through to there. It also can be counted bearish from this high point here, because we've got down for 1, an A and a B and a C, back for 2, and this is still really technically unfolding to the downside through here. So we still, you know, we still have that through there. And while the 70 while this price here is below these top levels here, then it's still in a bearish mode from that point there. So a breaking of that high there would trigger the upside there as well. But there would be a reaction at the 29 as well. So realistically, 29 as support would be to the upside. If there was a really nice support developed on the 28.72, then look to scale in you know, on that 72 and on the 80 through here as well. So just a little bit sort of unsure there. The oil market, this is just the weekly chart here. We'll drill down into this through here. We've got trendline resistance that's coming through here. That will be roughly at the 97. 20 in there. This other one that's coming through here is obviously is current resistance now, and that resistance, as I meant yesterday, at 96.50. So that's going to be a point of contention through there. Just want to drill down into this move down through here appears to be in an ABC, so an A and a B and 5 waves for the C wave here, so corrective through here. So it is quite it's quite reasonable to expect a move above here. But this move up through, yeah, this is. Let's just bring it in here a little bit so we know where we are. So we were looking for 5 waves up through here, and those 5 waves are in here. We're looking for 5 waves up through here and looking at 96.50 as the resistance through there. So let's just allow that to play out there. We know there's trendline resistance through there. This trend here also hasn't had its correction, hasn't rebalanced. So in the rebalancing process, there's obviously profit taking at the closest largest number, but 96.50 I know in this in oil just plays a strong role. So so profit taking, stops being taken out, value buyers coming back in and pushing it back up, then the accumulation stage. There is a process in a corrective pattern as such, but this needs correcting through here, and that should play out through here. So that's where we're looking for resistance at this point here, the 96.50. Then any higher up would be the 97, the 97.20, even though I haven't got it written in here. So, but look, the other side to this is that the reason I'm pointing to further upside as well is because oil is likely to follow stock to the upside, and if the S&P 500 is going to push higher, then oil will go with it as such. So, all right, let's have a look at the US dollar. Here is pretty much on track. We're still looking at further upside, so we're looking towards the 84 here next. There still can be a corrective pattern here on the 83 here. So on an intraday level, you need to be looking at, from this little correction here, looking for 5 waves to the upside through here to get a top in there. So probably resistance at 83.50 through there. So just keep an eye on that, and if this does pull back through here, that's that's not a problem. It's just checking from, well, kind of this move obviously happened and we can't sort of deny that, but we need to consider the sort of 5-wave structure, little 3rd wave in here, the 4th here and the 5th here, and then the little ABC here, and then moving up through there. But all finding nice support on here, and also because of this 3-wave structure here, we'll be taking out this high here. So we're on track to go higher here, and that would leave the euro to the downside, which it is. So this is the 4-hour chart, but just sort of drilling into this here. This 128 is probably likely to find have a retest here, but that will, if we just drill in here first, let's have a little look here. So if there's going to be a retest to the 128 here, because such a number, I mean the euro has low retracement patterns, so I'm sort of taking that in consideration. But if support is found on the 12772 here, then expect a retest through here, and it may even come down here first, then get back up here, and so forth. So this little wave count here, just sort of tracking it down from here would be down for 1 here, back for 2 here, and of course you'd want to be short under the orange line, the 72, and then we've got down for 1, back for 2 here, and then inside of that we've got 1, 2, all the way for the 3rd wave, the 4th wave, and the 5th wave for wave 3 here. Then wave 4 here. Now wave 4 is moving across here. It's a little bit complicated, as you can see, and that's what we expect from wave 4 as such. So it may not be, it's a typical wave 4, and it may not be finished. You can see that it is working under the 72, but it's being supported by the 65. So a retest of the 65 would would consider that finished at that point there. So I've got the wave 4 here, but just got to be a little bit careful that it doesn't sort of extend. So it could certainly be over here with a little C wave up in terms of an A and a B and a C wave up through here as a retest for the 128. It has pulled back to the fourth wave of 1 lesser degree, which is here, which is fine. Look, but anyway, what should occur eventually is once this wave 4 is finished, a little wave 5 down for wave 3 here. Once we've got to wave 3 here, then we're going to go back to wave 4 of 1 lesser degree as well. So it should come back up here and retest the 72 area back up through here. I don't know if it'll come to the 72 or to the 128 here. It'll depend on where this wave 4 finishes here, or is it already finished there or not. So we'll just leave that there and allow it to move out of group 2 here as such. So once it's got group 2 as resistance, then you'll be looking at a 5-wave structure to the downside, and it can come a bit lower from here, but it's got to get through the midpoint and the top of group 1 here. This is a 772 number, and this is a 272 number. They're both going to be very strong. So what I'm trying to say here is that in this move down through here, we're working through waves 4 and 5 and 4 and 5 down through to here. We're also working with 272 and 772 here. So it's going to be a bit of a bumpy ride coming down in through here. So just be a little bit mindful of that. But we're looking for it to come down into eventually into the 127 area through here. So just look at the intraday pattern on the US dollar, or perhaps even the Footsie or the CAD as well, to try and work out the top of the US dollar there. The Australian market is just starting with the bigger picture here on the 4-hour chart. We're looking for a reaction at the 105 here, and that seems to be sort of unfolding. As mentioned yesterday, we're looking at, well, this block here is the demand support area through here. So we're looking down through into this area through here. We're looking at it in terms of a 3-wave pattern in terms of an A and a B and a C coming down through to here. We're still in the first leg coming down through here, so just drilling into that first leg there. There's a couple of ways to count this first leg through here. You can see that we've got this first move down through here, and then we've got the move back up through here. So that can be wave A or wave 1 through here, and this can be wave B or wave 2 here. What we also have here is from this high here, we've got this down for 1 here, back for 2 here, and then we've got the third wave, which is nice and strong here. And in the third wave, we've got 5 waves as well, and inside the third of the third here, it's the strongest. So that's, in Elliott terms, what you're always looking for. You're looking for the third of the third wave through here. You'd be short on the retest, failed retest, or the breakthrough of the 72 here and the 65 here. But look, this first leg down here may not be finished. We'd expect that if it's going to be at the there's still one more leg to come down through here, whichever way you sort of look at it, because from this move here we've got 1, 2, 3, there has to be 4 and 5 to come down here just to complete that section. And it can still come larger as well from here. So if I just drill down in there further, that's what it sort of looks like here. I've just labelled it a bit differently, excuse me about that. But look, just looking at that 5-wave structure, you can see that in this move through here, I may have got it wrong just here. I need to double check. I should be right. This should be the 4th wave here and a 5th wave moving down through to here. Look, if I'm wrong, then the midpoint here, the 50 here, support on top of that 50 there, would see it retest back up into this area through here, and then we would have to then we would have to call this as an A and a B and a C wave down here just for the A wave. Do you know what I mean? So that would just be the A wave to here. So the B wave would be back up here and the C wave would be down here. But I'll just leave that here for now. There's a couple of important things here. The group 1 here, the 10, 20 and 30 here are the first support numbers before we get into 104 here. If the market stays under the midpoint here, then it's still in sort of bearish mode, and this would be treated as a rally through here. If the 144 here, and I've just marked that in, the 144, the 72 that we use is obviously half of the 144 there. And so it's important. If that 144 became the resistance through there, then you would know that there's the second layer. It'd be moving to the downside from that point, because it is the support from this stage here so far. So look, I just allow this to unfold. However, if the if the midpoint here 50 became a nice support through here during the day and tomorrow, then obviously you'll be trading it to the upside there. But under the 144. Trading down through here, it would move lower through here. Normally, we don't trade wave 4s to start with, generally speaking, Elliott, and also using the levels as well. Coming down into group 1 is not really a trading environment as such. Going up is a different story, but coming down just creates a lot of choppy price action more often than not. You can always prove me wrong, it doesn't matter, but we're just trying to work with the probabilities. So I forgot what else I was going to say there, but anyway, that's that. Alrighty. Right, well, good morning, good luck, and enjoy Easter.